All right, ladies and gentlemen, got your watch list coming in October 4th, 2019, and we need to talk about why the stock market is reacting so heavily to all of this economic data. We got more economic data tomorrow morning, non-farm payrolls, as well as the balance of trade, even from some other countries, and based on the last few days of the ISMs and the stuff that happened today with the services, this is going to be important. And then on top of that, around 11 a.m. Pacific time, we are going to have Jerome Powell speaking, and I want to discuss that and what to potentially look for, because these two are both catalysts. The economic data and what happens with Powell's speech, this could make a move. And now it's not going to be an official press conference from the Federal Reserve, so don't take it too seriously with the Fed. However, given what we're seeing today and what we've saw in this whole week, it doesn't mean that the implications and what he said is going to be taken more seriously and the market's going to be ready to act. So I'm going to go over that, go over the plays we made today, and then what to watch for tomorrow, as well as how to make sure you don't lose if you sold one of these spreads. I've talked about it in the past, but I'll show you guys quickly because I'm in some positions that might require it and some that need it right now of rolling over these options. So you guys have been following along. You've been seeing how these plays have been playing out, and the spreads have been very advantageous really all week. Despite what the market's been doing, we've just had a nice uptrend. Really, this was that Friday, then we dropped on Monday, then it pretty much just came right back. So this has been the advantage of the spreads and kind of what we've doing. But I want to go over the plays and some of the earnings we got, but let's get right into it. You guys know what you need to do, though. Before anything, drop your thumbs up on the video. Make sure you guys are subscribed. We're going to be live here in the morning, 30 minutes before open. And the most important thing you need to do, post your watch list below. Let us know what you're looking at, what plays you're in, and source that information. You guys have been awesome, killing it. The info's there. Watching and reacting to the news has been important. But as far as the keys go, well, actually, here's the economic calendar. If you guys are ever concerned with this, you guys can go to Trading Economics, hit the calendar up here, and it will show you all of the scheduled events. And that's what we saw here today. The market, surprisingly, it gapped up to shock a lot of people. People were kind of confused, and literally the first 30 minutes of the market, it was actually going up. The volume was still decently high. It was a lot slower than what we saw yesterday, but then it started going up, and then out of nowhere, the service numbers came in, and it came in at like 52, but they expected like a 56, so it was still a big miss. However, 52 is slightly above the contraction number, so that was at least decent, but it caused a real big sell-off, and volume came, and this is very, very, very surprising. And this is the big key to answer what we've been seeing with the whole market in general, and why has it been like this? We said this the first time. This is kind of unusual. I've seen ISM numbers and manufacturing drop it, but this has to do with the bigger picture. So you guys have seen me talk about this a few times, and I've been bringing this up. We're going to have to beat this in your head because I want to make sure you guys are seeing how it's affecting. Anytime this probability, again, it was at 24%. We got a big drop. Even though we ended up closing up, this changed drastically. And now this is going to affect tomorrow with Powell. But essentially, the economic data is so important right here, right now, because there is a huge wedge issue between the Fed and what they said they're going to do, what they said they already did, and now what the market data is forecasting, not to mention the trade war and everything else literally right around the corner. That's going to all begin next week, so watch out for that. But essentially, again, we have the non-farm payrolls in the morning and the balance of trade, but Powell is going to speak now, and this is where it's going to get important, and this is where the economic data is factoring in, because people want to see how he's going to react to the question regarding the poor economic data and if it's going to lead to more cuts. So again, we said this, we've been saying this, I've been saying this on stream. They said they're not going to cut. Now the data is really bad, and it warrants a cut, and then the market's expecting a cut. What's he going to do? And now this is where the speech tomorrow, he's going to come on. So we're going to get this data here in the morning, and then the market will probably react, but then he's going to come on at 11, or the market might even cuck, or it might do a gap up or down and wait till he says something. But we have to be able to see how important this speech is going to be, because it could either be one of those Fed listens events where they're just going to take questions from people, and it could touch on everything from diversity and income equality and all that. So it might not even be as specific and focused as we're thinking. It's going to be more of a random speech, but it's not going to be a real big press conference, but it could still have implications, and that's what we're waiting for. And what we want to see is what he says to this whole, what are you going to do now? Remember, he took a stance 2 weeks ago. Him and the whole entire Federal Reserve all said no more cuts. So this is what we want to see. If he's hawkish, meaning he says, yes, we're going to stand by it. Hawkish means he's going to be aggressive in saying not cutting rates. So he's going to stand by keeping the rates where they're at. And if that happens, if during the speech, the market will respond negatively. If he's dovish and more accommodative and says something along the lines that they will cut rates or will have to act aggressively and appropriately, and that this is what they're seeing with the data warrants it, he's going to be very, very vague, the markets will react positively. But as far as the market goes in anything, I'm looking for a gap up and a trickle down, or vice versa, a gap down and trickle up. Someone said that earlier. I think it was Cameron. Shout out to Cameron, baby. Shout out to Chad. We love you all. And I think it makes sense on both sides because we're going to have two-tiered approaches of the events, and I don't think it's going to last too long where the market is super sensitive to this economic data. But if it is, we will be able to get confirmation here with the Fed. And then coming into next week, you know, this is all falling in line with that watch list and what we talked about yesterday with the ups and downs and how October and this volatility is going to move. So pay attention. But if anything, watch these key levels because that was what we saw here today. If anything, I'm looking for slightly above 289. Oops, I meant to put 290. And then if anything, below 284 and then up. So again, it could go about 290, 290.50, and then maybe come down, or even like 291, maybe, I don't even know, to about 292 and then come down. Or if there is a downside move, it's probably going to test that 284 again and then come up. But that's pretty much it. So let us get into the plays. So there's a few different things I want to talk about here because we made a few different plays. We're going to start with those. Here's Costco. And you guys are going to see now if you have spreads, and this was another daily gamble. And what I mean by that is that even though it is selling premium, the odds are going to be a little bit different. And today was a great example. If you saw the Facebook that we made, this trade, when I was looking at it, it was a 70% probability trade. By the time I took the trade, it was a 40% probability trade. And the trade that was a 90% probability trade became a 40% probability trade too. They could move a lot with these dailies. Again, you guys are seeing how we could build the account and how it's looking real nice ever since we're doing the credit spreads. But watch the strategy video where we said how to turn 100 into 10,000 safely. It's diversifying, right? We've already taken profits, but you can see here, I have some medium-term spreads that are about 2 weeks out. And we've already got the cash out on stuff. And even then, why I made this Costco play, I took that Microsoft yesterday. I showed you guys that went up 50%. I closed out of it, and I actually made a day trade today. I sold a Walmart put. It went up. We went up 50%. I was like, all right, you know, I'll take the profit to go do another play. And I did these two to get a higher credit. But be careful, because tomorrow, if you're wrong on these plays, you're going to take the loss, or you're going to be stuck in a position where you're going to have to roll them over. But I like the high credit aspect. But this is the play we did on Costco. This was an iron condor, and now they had earnings, and this was actually pretty good. So again, how this opens tomorrow is going to affect this play. So if you got this play, you're going to have to watch to see. You could either have the opportunity to take it in the morning. If it's up over like 50, 60%, you might want to take it. But again, how pre-market moves will be key. I'm going to be more prone to take it if the stock ends lower. And if the stock is going higher, we have a higher range. I'll be more likely to hold it till the end of the day because it's easier to go down than up. So keep that in mind in the lower range. But what do we do on here? And this is where you have to be careful. A lot of people had expectations for earnings, and think about this. If you played earnings, if you got a debit spread, you most likely got cucked unless you're actually in the money on both sides. People played earnings and they lost both sides of this. So watch the recap, because I talked about why we made this play. It was looking at the options pricing at the time. You know, the stock closed at 290. Come to the weekly, we were looking at like these 290s. That's where the stock closed, and it was pretty much pricing in $6 on the upside and like $5-6 on the downside. It was pricing in $5, but then the stock, it was pricing that from the morning, and then the stock went up $5. But pretty much I played the odds based on what the market maker was saying. That's why I did the ranges I did. But what we did with this iron condor, this was literally 2 credit spreads at the same time. So I showed you this with Apple. That play actually, we're up 50% on that. So again, if you remember this from yesterday, we were talking about that one, but it's the same thing here. What did we do? I sold a 292.50 call for $4. Bought a 295 for $355. We got the cash difference between there, and then we sold a 285 put for $460, and then sold it and bought the 282 for $370. So the total credit was $186. So this is why I did the play, because it's a $250 difference regardless. Here's the break even. If the stock closed above 294.36, we lost money. If it closes below 283, we lose money. That's it. But now if we collected 186 and it's a 250 difference, the max you would lose on that is about $50. Excuse me, $65. 250, the difference between the strikes, either call or put, because again, if it hits one side, the other one expires and you'll get the cash, but it's the difference between the strikes minus the credit. So it's $60, and my logic was we made about $30 on the Microsoft, And then I made another $25 on the Walmart that we sold. So I said, hey, I could either hold the Walmart for tomorrow, that one, because that Walmart expired tomorrow, and I could have made an extra 20 bucks, or I said I could risk the same $50 and get myself exposure to 186 bucks of credit on earnings. We'll take it. And again, I think there was a lot of hype behind Costco, so I just played what the market makers were saying. I think it could go both ways, and I played right in the middle there, and it actually is working out. So we have to see how to close that out tomorrow. Then we also did a Facebook call spread. So this one was just a normal credit spread on the call. So Facebook actually killed it. And my logic behind this one was I thought Facebook, last few days, you kind of see, even though the market dropped, Facebook dropped, but it held up a lot better. So I'm pretty much thinking it's gonna be a lagger one of these days. And again, Facebook could continue to go, and it could just end up lagging next week. So we might need to roll this one over to see what happens. And if you guys remember, though, I sold one of those October 18th puts on it, and we're actually already up on those. But pretty much I wanted another high credit play that if we're right tomorrow, and that I sold it a little early. I got impatient, and even if you waited, you could have got an even better one, the 180s. I like those, but these are pretty much right there. We sold the 177 call and bought the 180. My plan is that hopefully it falls out the money tomorrow. We got $120, $28 credit. It's $250 loss, so we could lose on that play. $122 is the max loss on there. So pretty much if the stock ends up above 178.78 tomorrow, which it's already above there, we lose. But tomorrow, if it makes a move down, or anytime it comes down here, we'll make money. So that one's, again, going to be a little risky one on gamble, but we're going to roll that over. So now those are the only plays. And then here's that Apple Iron Condor we did yesterday. Again, we sold that for $111 credit. You could have, it's worth 50 bucks now. So if you wanted to take the $61 in profit, you would just buy it back. But we're going to hold that there. It's $3 out of the money there. So if Apple has to move less than $3 tomorrow, and we'll make the other 50 bucks. Then we have the Boeing. I forgot about this one too. So again, this one, if Boeing closes above 370, we're going to make another 100 bucks. We already got 60 on these. So you guys have seen these plays go out, but pretty much it's kind of crazy to think about. We might take a decent loss tomorrow, or we're going to walk away with some bigger profits here, because some of these probabilities, and depending on what the market does, but if all three of these hit, that'll be another $400 or $500, believe it or not. And then lastly, here's the Disney. Now this is what I wanted to talk about with rolling over plays. This expires tomorrow. I'm going to hold this till Robinhood is probably going to try to cuck me and force me to sell it. And what do? We're already down on it. Oh, it's not letting me go to it. So it's not showing up, but tomorrow it should show up if you have the contract, surprisingly. But what you would do, or you would even just let it close out. Disney, Robinhood will close you out at a loss. You close it, and then I'm going to open the exact same play. So we'll take the $118 loss, and I'm going to open up a different credit spread play on Disney, same exact position. I'm probably going to widen the strikes, and we're going to make more by collecting more credit and then hoping it does the same thing. So we have those puts. So pretty much I would do this. It's the 131, 129. I would go sell this one right here and then buy the 129. But you're seeing the total credit is 120 is how much we'd receive. So if I get closed out of the other one, I'm going to take a loss of 120, but then this will credit me 120. So then if this one in the next 2 weeks, though, if Disney ends up bouncing and these expire out the money, I make that 120 back. We get the 50 bucks and the loss. But what I am even considering doing, I might even widen the spread here by an extra $1 to walk away with more credit and buy the 128 here, because then it would give me a total credit of 169. So it'd give me an extra 40 bucks on top of that for taking the extra time. But that's a rollover. So go search how to never lose a trade rolling over spreads. We have that video, and that explains it. But the rest, we're holding all the other sprays, the HDs. I have another one of these expiring too, but other than that, nothing too crazy. As far as what to watch all these. Watch Apple, Facebook, Boeing, Disney. All these are going to be important. Then I want to watch BABA, because it's that kind of the same reason we saw with Facebook. Facebook has been killing it. I'm going to wait to see now if the market does do good tomorrow and there is a bounce. These Chinese stocks have been doing really good. Watch for them to be a lagger now if the market starts doing good. Then UVXY, I really am starting to like this one, because now this is what I've been waiting for, where I've been telling you guys how we've been doing it. We're selling the insurance while it's expensive, selling the spreads, waiting for the value to come down. When everybody wants protection, we sell it. And then once it becomes cheap, we're going to buy back. So watch the UVXY. That could get important. I like that. And then Walmart as well, too. Depending on how that moves, especially with what I saw with the contracts today, those could be some lower risks, higher profits that we might be able to see. Then watch Costco, like we said, and then watch the chip makers. Intel, they had a very, very big move today here too. And if it starts staying in this range here, these are options that are lower volatility. So on the purchase side, they could go up a lot, or even like McDonald's, if you do some selling some spreads and it moves faster than expected, you could make a 50-80% on some of those spreads real quick, and they only have $50 max collaterals in between. Watch Bank of America and TLT. They had a big drop today, and again, watch the interaction between the two. But if it still holds up here, if it doesn't break above 28 and shows weakness, watch in these moments, because if the market starts to bounce or do something, it wouldn't be unusual to see TLT and Bank of America actually, or even any of XLF and any of the finances, start moving independently. So watch those. And then we said NVIDIA, again, related, they did good. They had a crazy move today. I was even thinking about selling calls on there. Thank God I didn't. But if this move starts moving higher, you could see this type of move. We like selling into that momentum. I even saw Teslas today. I was going to sell those, but I kind of chickened out. But watch that. Maybe tomorrow we'll see. And then Roku, they kind of bounced today. So again, you might start to see some of these momentum stocks take a run. Watch Shopify as well. But these are NVIDIA, but more so Roku, because I think Roku is in its own little category. This could be a good one to start selling credit spreads on the calls. And then watch McDonald's. Watch McDonald's and Home Depot. Both of these are the half value, half momentum. I want to see where they're at. The Home Depots are pretty crucial. And again, if you are in some of these plays and they didn't work out, I would look to rolling some of them over. If you did sell too early on these, or if you sold, some people sold calls and it went up there, just roll over to deeper calls further out, even though they're a little cheaper, or you could wait a little bit. But again, and you guys are seeing why it sucks sometimes with the shorter durations. But watch both of those and how they move. If they move independently from the market, they will be important. Then lastly, Anthem and UNH. They both, Anthem, I mean, both the call and put spreads we've been doing have been really, really good so far, and I like them. But there was a medical or a health bill or something that Trump signed today, and I think that could have an effect. But watch there too. Again, the whole rotation effort and what the stock does in general. But that is your watch list, ladies and gentlemen. It's going to be exciting. We've already had a great week. Let's finish it out strong. Be positive, respectful, ready to go. Stay hydrated, stay healthy. Make sure you guys got your head in the game. Drink your water, read your Bible. Let's just go. Just be positive. Control the accounts. Keep the YOLO demon on a leash. You know, control him. Be smart with this. Don't panic. Again, in any of the credit spreads, be very, very careful of getting in a spread and then getting out. Especially if it goes against you, let the time play out. That's the beauty of this, is we could be patient. I showed that, this morning Robinhood wasn't working. It looks like, look how aggressive this downside looks like. We were only down like $50, and then right when it bounced, it went even way, way higher. It's the same thing too. So understand your loss is capped. If you don't want to take the loss, don't get that wide of the collateral. That's the only thing you guys are exposing yourself to if you're taking too big of a collateral or you're selling more of these than you need to. So just go slow. If you took it slow, you would have made the money faster, baby. Don't worry. Little by little, build it up. But that's it, baby. I'll see you in the morning. Let's go!